Thank you guys, first and foremost, for taking some time out of your night. I really, truly, truly appreciate it. I hope you guys had an awesome, fantastic week. So, I'm doing today's lesson. It's going to be a free for all. Whatever you want to talk about, whatever questions you have, whatever you're struggling with, feel free to drop whatever you have, and we will talk about some stuff. We're going to do about a 30 to 45-minute lesson, try to get as much value as we can in here. So, give me some questions and let's talk about some stuff. One sec. Let me read some stuff. That's a good topic to start with. I like this topic. Comment/question is fought the trend too hard this week. Really thought we would reject and melt back down. All right, let's dive into this one first. I'm sure a lot of people felt the same way, and probably that is another reason why you guys are getting, as you said, melt and not have some very much fun. So, okay, I can fully understand why you are possibly trying to short. We went up 15% in the matter of about 1 month, right? So we're definitely extended. Okay. Now, the thing that I want you guys to resonate with, we are short-term traders, right? We are traders. We are not investors. So there is a complete difference. And there is 100% difference. So what exactly do I mean by this? What I mean is, yes, in the news, we're seeing tons of bearish shit. Lots of talk about recession is imminent, GDP numbers crap, all these other numbers are crap, et cetera, et cetera, et cetera. Puts a lot of fear into people's minds, right? It puts one-sided cognitive subconscious biases in our minds. They're saying, oh goodness, the numbers are terrible, jobs are terrible, recession, inflation, blah, 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 right? So yes, as an investor, you 100% care about this because investors think in months, they think in years. That's their time horizon. We are our main job, our main functionality is a short-term trader. We are traders. Therefore, we think in days and we think week to week. So we think day to day and we think week to week, right? That is what we do. So yes, recession is terrible. There's probably going to be a dump, but currently the market doesn't give a shit. Clearly, every single pullback that we've had recently gets relatively bought up pretty, let me just take all this off. Most of the, most of them are getting bought up decently aggressively with very little pullback, very little consolidation. We had a little bit of a consolidation aspect last week, pretty range bound, but you kind of see the point. Over the last couple of weeks, we're just steadily just climbing and climbing and climbing. Therefore, we need to just play what's presented to us, not our one-sided bias. Yes, I know, myself included, I still sometimes struggle with this and want to short this. But currently, if you kind of see today, there was really not very much opportunity. Like every single consolidation pullback was bought up pretty immediately, right? They're like, show me on this chart where you had an actual probable setup for puts. The answer is you didn't really have one, right? Now, if you're a scalper and you're trading really, really quick, like super quick, sure, you might have been able to get something, but like an actual downside, you really had no true, anything. Maybe here within like a two-minute scalp. That was probably the best scalp the entire day. Maybe this, but you get the point. The entire chart is pretty obvious that it's every single pullback is getting bought up. And also, if you look on the smaller stuff, so like let's put on the 13 moving average, you can ride this moving average up the entire way and just chill out. Basically, just sit back and chill out. Even on the 2-minute, maybe not the 2-minute, even on the 3-minute, you pretty much had not really much issues. You kind of just stayed in the trade the entire day, right? So you can use that as a possible reference point. So 13 are Fibonacci's, 34 is a Fibonacci, and an 89 a moving average is also a Fibonacci, just for a quick tip. But you get the point. So we are traders, we are not investors. So we have to play what's presented to us. Yes, we are very extended. Currently, though, the market doesn't seem to care. Therefore, we aren't having the probability to short yet. We haven't had the real, like yesterday we had an exhaustion day, right? So we had a gap up, we had a failed breakout, we rolled over at 425, and we had the exhaustion, right? We had that yesterday. Just because we had that the day before doesn't mean we're just going to go right back down. In this case, we had a gap up, we broke through this little liquidity area, so 423, and then we had a massive, like right here alone, when we broke above 425 and we didn't just immediately get rejected and we ended up flagging again, why would you short this? Like, show me right here where you can short this. Like, that is the most bullish confirmation you can get all day. We broke through 425, which we rolled over the day prior and dumped 6 points. So we broke through that with volume, and we had follow through. So we had a massive momentum candle. We consolidated a little bit for a couple minutes, but no time in this chart did you have any justification to short, right? Same thing. We just kept going higher. Now this one was a little bit weaker of a drive up, but still, you didn't really have much justification to short here. So you kind of get the point. Just because you want to short doesn't mean it's the right trade just yet. Just because it's happened before when you fought the trend and won doesn't mean it's going to happen again, right? This is actually the less probable trade. Myself included, I sometimes struggle with this because I see myself, I'm like, wow, I missed most of this trade. I missed most of this green today. So I'm coming in towards the tail half of the day. And my first thought process is it's the short. Okay, it's time to short, right? And that's sometime it can work, but not all the time, right? Just because it worked one time doesn't mean it's going to work again. Therefore, we're actually fighting the trend. So when we fight the trend, this is the less probable trade. So we can do two things in this manner. So let's pretend you come into the market at power hour, you missed the entire initial run. That's okay, but that doesn't automatically mean it's time to short. So the two things, I feel like if you're resonating with this and you find yourself in this mentality, you have two real things you can do. Scenario one is literally don't trade. Get up, peace out. Simple as that. You missed a lot of opportunity today. That's cool. Come back tomorrow. No need to chase. No need to be somewhat emotional. No need to be one-sided bias. Just get on up and do something else. Scenario two is actually go for longs, because it could just be a straight directional day and shorts might not be the case, right? Unless you have like really, really, really good justification, like we broke through the structure, we have like 5, 10, 20 minutes of straight selling, maybe go short. You're going to miss some of that for sure. You're going to miss some of the leg down, but I'd rather get back on I would rather get on a pullback and catch half of the move than try to fight the trend and enter shorts on, or just a pullback higher, possibly a higher low, right? Because these aren't the probable trades. Just because you want to do it doesn't mean it's a smart trade, right? And also another thing that we want to be aware of, how do I put it? Let me think here. News truthfully doesn't mean shit. Straight up. Yes, it means stuff for investors, but for traders, we don't care. We really, truly don't care. You might have some sort of initial reaction around a specific timestamp, around like PPI number release, CPI number release. You might have initial 5 to 30-minute reaction. But other than that, it depends on how the market is perceiving it, right? Just because we have quote unquote bad news, like bad numbers, bad projections, recession news, blah, 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 doesn't mean it's going to tank. Vice versa. Just because we have good news, good numbers, good earnings reports, blah, 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 doesn't mean we're going to just immediately rally. Like it could, news can do whatever the hell it wants. So just because we have bad numbers, we can still rally. So prime example. Remember Google's earnings? Put up Google chart real quick. Remember Google's earnings? Where the hell are they? They didn't do very well, right? They actually missed it by a decent bit. Their guidance for the next quarter really wasn't that great either. So theoretically, you think the market would tank it, right? Why the hell didn't we tank? We rallied off this low. We rallied, let's see here, almost 20%. Bad news, and we still rallied 20, almost 20 points, right? And then Amazon. Amazon also didn't really do that well either. Earnings kind of, didn't do that great. Next quarter guidance was all right, but they're seeing a lot of margin. They're getting a lot of lower and lower margin. So that's not very good. So in general, they didn't really have the best earnings, yet they've rallied 22 points pretty much almost every single day, besides like one after earnings. Bad news, market didn't give a shit, right? You kind of see the point. And then SPY, right? SPY the other day when everyone's fucking short as shit, right? People thought the GDP and the Fed news were going to be super, super bearish right here. Remember that when everyone got wrecked? Remember? Yeah, I'm the one that was calling 400 calls and everyone was like, nah, short this. Guess what happened? You got crapped on. So our GDP numbers and our news wasn't that great. Why did we do this? Right? Why are we doing this? Because clearly the market doesn't give a shit. And that's what we have to play. We have to play what is presented to us. Now, another reason, because people ask me this, why I was long, like what was my justification? I was looking at the flow. I didn't even care about the news. Like the flow for the last couple of days, so like the flow 2 days prior, so this day, and like leading up to the news was relatively incredibly bullish, right? At the ask, out of the money, showing urgency, bullish. Therefore, before the news even dropped, I was leaning towards a bullish sentiment, right? Now, that's another thing we want to talk about. Just because we had bullish sentiment in the flow doesn't necessarily mean it's going to happen and or going to happen that same day. Like we have to remember that big boy investors know things beforehand, so they could be technically loading up a week prior. Another prime example, Tesla, right? So Tesla, where the hell was it? Right here, I think it was like either the second or the third. Yeah, it was one of these days. I think it might have been halfway through the second and midway through the third day, but the August. So anyway, so there was a pretty incredible bearish flow coming through with Tesla, and just because there was incredible bearish flow, on the second doesn't necessarily mean it's automatically time to short. Because if you ended up shorting here, you wouldn't really have that much fun. Yeah, I did a little bit, but nothing super major. Same thing, we had bearish flow coming in on the third. If you try to short this, you got wrecked, right? So people knew something ahead of time. In this case, we actually found out that one, we had a stock split announcement confirmation, and two, Elon Musk ended up selling shares. So people knew ahead of time of this news. Therefore, we're being aggressive with premium bearish premium coming through. So just because it didn't happen immediately doesn't mean it might not happen. It ended up happening a couple days later. Boom, boom, boom. So that's something that's a huge misconception when people read flow analysis. Just because we're seeing a shit ton of maybe bearish premium or a shit ton of bullish premium doesn't necessarily mean anything. One, it could be hedges. Two, it might happen maybe in a day, maybe in a couple days, maybe in a week, or it might not. So that's something to really consider when analyzing flow analysis. And also, you want to not just blindly just buy shit just because. All right, for example, all right. So here's some of the flow at the end of the day. Just because we're seeing some of this, right, doesn't mean I'm just going to automatically buy this because I see that, right? That doesn't mean anything because some of this is just multi-leg. So when it's a multi-leg, it's just a hedge. So that doesn't mean shit to me. I can't really figure out what that is because it's a hedge. It's a multi-leg, right? So same thing. Just because we're seeing all this bullish doesn't necessarily mean we're going to see a bullish rally on Monday. Yes, it could be 100%. We could, but it doesn't necessarily mean that. We could have a down day for all we know, right? So that's something that we want to be aware of. Just because we see this doesn't mean we blindly, enter calls. It's like, oh crap, time to enter this. Like, no, you want to at least look at the chart and be like, okay, how's the technicals look? Do the technicals look good? Does everything look, all right? And also, if you ever see stuff like consolidating, just to, kind of get off the point here, but if you ever see stuff consolidating in like this case, nothing's really happened yet, but you see a lot of one-sided flow coming in, whether bullish or bearish, that's a pretty decent conviction that something might happen because we're consolidating and there's a lot of flow coming through. So we might end up, doing something. So that's just some flow analysis. But I hope that kind of resonates with you because, like, truthfully, numbers don't mean shit. Like CPI numbers, PPI numbers, non-farm numbers. Yeah, you might see some sort of like initial impulse catalyst, but even if it's bullish or bearish, like if it's quote unquote good or bad news, doesn't mean anything. If it's bad numbers, it could still rally. If it's good numbers, it can still dump. So honestly, I would turn off the news and turn on the flow analysis because you'll see stuff a lot sooner with utilizing flow analysis than watching news, because flow analysis will always come before news. Because if you think about it, big boy investors always know something's up before news. Something to think about. So just because it's super extended the market doesn't mean we can't run further. So prime example, back in March, I remember, where is it? March. Remember, everyone was like, what the hell is this? We had like basically, what is this? Same exact type of movement. Over the course of 2 weeks, we rallied 45 points. And people are like, how is this possible? I thought we were in a bear market. I thought we were in a recession. How is this, how is this happening? Clearly, the market didn't give a shit, right? It didn't give a shit. Same thing here. The market did not care. It doesn't care. And our next real target is like 430, right? So like right up here where we have more areas of resistance, this is like, we could possibly go here. Like, this is not impossible. We could go to 430 before possibly dropping lower, or who knows, keep on going higher. We have no idea. If anyone tells you they have an idea of what the market's going to do, either they're an insider trader or they're full of shit. Like, that's it. So that's just kind of my 2 cents on fighting the trend. Don't fight the trend. It's not the probable trade. It's not a high conviction trade. Either sit cash because you missed most of the drive up, or go calls. Light size. Be very, don't go your full size. Go, so let's say your full size is like 5 contracts. If you already missed a good bit of the move, either sit cash or size down, maybe do 2 contracts instead. So hope that helps answers your question. All right, what else? Let me kind of read some more questions. I got into that one for sure. One sec. All right, that's a good question. Maybe not a question, but so you took a loss because you ended up swinging 0 DTE. So you swung stuff from yesterday into today. That is a literal recipe for disaster. I would highly recommend not doing that. You are basically straight up a degenerate gambler if you do that type of mentality, simply because theta can absolutely destroy you. And as you saw today, theta destroyed you. It bent you over and absolutely destroyed you, correct? Therefore, if you do want to swing, I would suggest swinging next week expiration there because the theta is not as severe. So the only way I would swing weekly expirations. So here's the game plan for you guys. So if it is a Monday, let's pretend it's next week. It's a Monday. If I want to swing, let's say AMD, that's fine. I will buy a weekly expiration. Ideally, I'm holding this for 1 day overnight, maybe 2 days max. Max, right? Now, let's say it's a Tuesday. Okay. I'm okay with buying a weekly expiration here. Now, I only want to hold this 1 day maximum, right? Now, if this is a Wednesday, I do not buy weekly expiration anymore. I buy next week, right? I buy the next week because after Wednesday, the theta becomes extremely, really starts to decay you, right? So it's okay if you decide to swing weeklies. I'm not completely against it, but I would only do it on Monday or Tuesday. So like Monday into Tuesday, maybe Monday to Wednesday, sure, or maybe Tuesday to Wednesday, cool. But anything after Wednesday, you do not swing anymore. You buy the next week expiration. This is the exact same thing for indexes. Do not buy, okay, let's say we're on a Wednesday expiration, 0 DTE. Don't buy Friday. You buy at least Monday. So if it's Wednesday, you buy at least Monday expiration. If you can afford it, I would buy the upcoming next Friday. I hope that makes sense because theta is extremely powerful, and the closer to expiration, the more deadly it is. If the move does not go in your way pretty much almost immediately, you're screwed. Like straight up, you're screwed. All right. Just because, like, for example, so this, just to go off on another kind of thing real quick. I don't know. Let me see here. All right. Okay. I mean, this isn't really the best example, but let's pretend. Okay. Let's pretend just for whatever reason, I bought calls immediately out of open. And let's just say this is a 0 DTE day, right? So I'm on a 0 DTE. I bought a position right at the open. And for whatever reason, I'm buying calls and I didn't take profit here. I did not take profit here. I had the chance, didn't take it. For whatever reason, I didn't take it here again. I'm still holding this shit because I think we're going to go to the moon, right? So I'm thinking, all right, no big deal. It's going to go to the moon, right? So yes, technically speaking, at the end of the day, you're up $1.50, right? So you should be up money on your contract, but because you set from open to close and a 0 DTE expiration, your contract is probably negative just because you set through chop, you set through up, down, whipsawing. So general rule of thumb, when trading 0 DTE, hold it for 1 hour and 1 hour only. If the move is not happening after 60 minutes, just get out. You can always get back in, right? You might have just entered prematurely, or the move might not even happen. You could just consolidate the rest of the day. Why would you sit through that chop decay for who knows how long? Literally, this is something I see a lot of people do. They're just like, oh, I'm going to buy 0 DTD at open. And then 5 hours later, when the move actually happens, it's like, wait, why am I not making profit? Because you sat through most of the day during chop and your contracts got shit on because of the decay. Hope that helps. So just to reiterate, if you're trading 0 DTE, hold it for 1 hour maximum. If it's not working, if the contract's not going in your favor, et cetera, cut. You can always re-enter. And for swinging, where the hell is that little note at? Where did it go? No idea where I put it at, but just to reiterate, for swinging, oops, that's weird. Okay, that's weird. I must have screwed up my thing. Poop nuggets. 1 sec. All right, so back to this. But anyway, so yeah, you kind of get the point. If it's 0 DTE, hold it for 1 hour maximum. If it's not going your way, just get out, re-enter. Now for swinging, you can swing from Monday to Tuesday. You can swing from Tuesday to Wednesday for weekly expirations. Do not swing anything on a weekly time frame, weekly expiration after Wednesday. It is a recipe for disaster. You're literally a gambler and a degenerate. Don't do that. If you do decide to do that, which I wouldn't recommend, use extremely small size, or stuff like this can happen. Like, when people went heavy thinking the market's going to tank, even though we're in a demand zone, by the way, 420, 419 was holding strong in the prior days. So not sure why you guys would enter puts and do it blindly. This is due diligence. You gotta read your charts. Why would you enter puts after the market just tanked $6 and we're in a demand zone? That's also a recipe for disaster. Figure out your due diligence. Don't blindly enter signals. Learn for yourself. Be self-efficient. Hope that helps. Let's do some new answers and questions here. Let's see here. Every time I trade the first hour of the day, I get killed. Yeah, so the first 15, 30 minutes of the day is usually pretty volatile, like lots of up and down whipsawing movements. Highly would recommend just coming in, like, just sitting out at least the first 30 minutes. You'll find a lot more success not trading the open. Hope that helps. Let's see here. What is an algorithmic day? So an algo day is literally the algorithms are turned on. The market is basically made up of about 80% of machines, which are known as algorithms. And when that happens, usually kind of is a ripple effect. And when the algos are turned on, it's usually a directional based day, either to the upside or to the downside. Every day is an algo day. Yes and no. Algo days are literally just really directional days, one-sided. This is not really an algorithmic day, it's just chop. Sure, algorithms are probably obviously still functioning, but they're really not doing much of anything. That's just straight chop consolidation. Oh, interesting. I like this comment. Let's address this one. No one here needs an update after every 15 minutes. It's spam. My watch list is bullshit with calls and puts. I don't show my positions or screenshots, and I'm tired of your spam. I appreciate your feedback. I entirely appreciate your feedback. I believe some people are in the chat for signals, and some people are in the chat for actual education. If you know me, I'm very big on education. I'm very big on being self-efficient. Therefore, that's why I like to give more in-depth analysis than most, so you can actually, understand what I am doing and understand what the market is currently doing in that time span. I apologize that you do not like that, but that's my mentality. I want you to learn for yourself. I'm not going to literally spoon feed you. I apologize. That's not what I like to do. I am striving for you to be successful and be self-sufficient. That is my goal. I want every single one of you guys in here to be self-sufficient and not rely on signals, because what if, I'm not saying it's going to happen, but what if all these people that you're taking signals from just up and leave tomorrow? What are you going to do? You're dependent on people, but what if they just go? What if they leave? What if they say, peace, I'm out for a year, I'm about to take a vacation? Then you're kind of just left, chilling. That's why I like to give analysis. So, and also sometimes I don't do signals because you forget that I trade 2 accounts at once. So try to trade 2 accounts at once and signal in real time. Pretty difficult, but yes, just wanted to address that. So thank you for your feedback. I appreciate you. Oh, that's a good one. What do you do during the day to make sure you do not overtrade or give back profits? That's a good one. I like this one. So you need to have a realistic goal for yourself. Realistic, keyword. So let's say you're on $1,000 account. Your true realistic goal is about $50 a day. Maybe if you had a good directional based day, you can get about $100. If you meet that goal, especially in a short term, time frame of like 5, 10, 30, 60 minutes, etc., like a short time frame, you're done for the day. Congratulations, you just made $50, $100 in an hour. That's awesome. Why? You just made 10% of your account in one day upwards, right? Therefore, compound and come back tomorrow. That you need to have a realistic goal in your mind that will help you curve the overtrading aspect and basically the greed aspect. Hope that helps. Also, second part of the question is, how do you not get FOMO and chase? Just by understanding that most of the move has happened, and I would rather get in on a pullback than chase a move as it's already, if it already ran like $2 with a 0 pullback, I'm probably not going to enter that. There's always other opportunities. Hope that helps. Yeah, that's a good, yeah. So having a hard time believing in a continuation after a gap up. Actually, if so this is how you can play gap ups. So in this case, hold on, this is actually a relatively decent example. Okay, so we had a failed breakout here, right? So we gapped up a bit. We had a failed breakout at this resistance region, and then we tunneled. We kind of rolled back over to 421, which is a psychological whole number, which acted semi as a support the other day, right? So this is pretty much just a trap, right? We're getting liquidity both to the upside and to the downside, and a lot of people are chasing puts here at the lows, and this is actually the incorrect thinking. You want to be aware that there's a possible trap for liquidity, and boom, 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 right? So don't chase lows, don't chase the top, just wait for some sort of a pullback. In this case, if you waited for a pullback, you probably would have entered or not entered, depending on your whatever bias you were doing, if you're trying to short shot or long side, because you can make money either way. Like I said in my comment earlier today, just because let's say Brett or Kev and I don't agree on, we don't see the same thing, doesn't necessarily mean we're incorrect. Like I could be seeing something and he could be seeing something else, because we have both different criteria and strategies that we operate on. Doesn't mean we're wrong. It's just every trader is different. Every trader sees something inherently different. Oh, thanks. I appreciate this feedback. I've heard people profiting off your newsletter. Where can I get more information on that? Cool. Appreciate that. That's just me personally. Appreciate you. But it's actually going to go on sale this weekend for Boiler. It's going to be on sale on Boiler starting this weekend. So, but yeah, thanks for that information and the feedback. Appreciate that. Let's see here. What else we got? Early in the chat, you mentioned to add some moving averages. Can you talk about the moving averages? Yeah, so some moving averages that I like to utilize here, I'll put it here. So if I want to stay in the trend, a couple ones that I would recommend are the 13. The 21 is not bad. The 34 is a Fibonacci. So the 13 and the 34 are Fibonacci ratios. So that can help you stay in the trend. And another one, now these become more like fair, like finding more point of control in a sense. So 50 and then 89 are good. So 89 is also a Fibonacci ratio. And then the ones that I really like to use, the ones I'm really interested in using are the 200 and the 300 EMA, simply because the 200-day moving average is where historically a lot of big boy institutions like to position themselves. They like to position themselves at this 200-day moving average. Therefore, I like to also position myself there because I know it's higher edge. Because if big money's positioning themselves there, wouldn't it make sense for me to also do the same exact thing? Right? I want to be with the hedge funds. I don't want to be against the hedge funds. So I would recommend checking these two out for sure. If you don't have those on, be super helpful, especially for intraday. I found them pretty useful for the 5-minute time frame. You can find like reversals or respects and bounces off of these key moving averages. Hope that helps. I'll leave that up there for you guys. Let's see here. One sec, just still reading. Will we see a rally into Tesla split? It's hard to say. Sure, maybe. I don't know. It's hard to say until I see pre-market on Monday. I disagree with that comment, actually. That flow algo is better than unusual whales. I actually full-heartedly disagree. I've used both flow algo and shutter flow, and unusual whales is by far much better and cheaper. Yeah, it's just an FYI. How do you know when to cut your trade and bag hold? What? That's kind of contradicting yourself. How do you know when to, oh, I'm assuming you're saying, how do you know when to cut your trade and not bag hold? Okay. Yeah. So that comes down to a lot of different factors. It's, it's kind of a loaded question right there. You want to go off like measured moves to give yourself a realistic target. You want to find large areas of where there's a probable bounce / rejection zone by charting the weekly, the monthly, and the quarterly time frame. You want to understand and learn supply and demand. You could pick up Fibonacci's, learning Fibonacci's just for the retracements. The Fibonacci retracements have been doing pretty well recently. Have realistic targets in mind, not just like, think to yourself, this must be 100% bagger or I'm not cutting. Also create a game plan before entering any specific trade. So like, okay, let me say XYZ, I enter this trade. Before you even enter, before you click enter, literally you need to know your targets. So like, okay, here's 3 targets where I can possibly cut, and here's my invalidation zone. You do this beforehand simply because you're not emotional, right? So you're level-headed when you make that thought process. If you do not do that, and you're kind of just, weighing it in a sense, then what happens is you get emotionally tied to the trade. You know how it's like, oh, well, I probably should cut here, but it's probably going to bounce. So I'm just going to keep moving my stop loss down and down and down. And then before you know it, you're probably like 25% stop loss that it should have been, ends up being like 50%. And at that rate, you're just like, shit, I'm already down 50%, might as well hold it. And then what happens is, next thing you know, now you're down 75%, right? Is that starting to resonate with you? Because that shit happens often with newer traders. Stick to your risk management plan, stop deviating from it, and you'll be good to go. What were some struggles that you had to overcome as a beginner? How did it affect you emotionally and mentally? My biggest problem was being stubborn and not taking profit and being greedy. Yeah, being greedy for sure. And also being stubborn and thinking I can do all this myself, and yeah, I ended up basically taking a lot of losses for like 6 months because I was trying to do everything myself. I was too stubborn. And then I finally realized, like, hey, I should probably like invest in like some sort of education or some sort of like mentorship, just to like accelerate my learning curve. And unfortunately, I wish I did that sooner. But I was too stubborn. So that's something that took me a while to overcome. It's for sure that, absolutely. Yeah, it was a bad time. But yeah, so hope that helps. That's just something to think about. All right, what else we got here? I'll answer a couple more questions. Let's see here. One sec, still reading. Oh, thanks for the kind words. Saw everything you're saying, Scrub. Thanks for providing reassurance. I need to start following your analysis. Your knowledge is appreciated as always. Appreciate you, big boy. You're the best. Let's see what else we got here. That's a good comment. Regarding that guy that said I was spam, if you don't like the spam, you can always you can mute me. Yeah, that's a good comment. How do you figure out risk to reward? Yeah, that's a good question. Yeah. So on TradingView, it's a pretty simple tool. So let's pretend. So there's where is it at exactly? It is right here. So it's right here, couple down. There's a long position and a short position. So TradingView is cool because it kind of does it for you. So let's pretend, hey, I'm going to enter here. There's my target. Let's go, I'm short, and then there's my stop loss. So it pretty much tells you immediately, hey, what's my risk to reward here? If it's above 2, that's pretty good. If it's below 2, that's pretty crap. You don't want that. Now on Thinkorswim, unfortunately, it doesn't do this process for you. you have to kind of do it manually, but it's the same gist. It's like, okay, here's my upside, and let's say here's my downside. If it makes sense visually, you're pretty good to go. You can kind of eyeball it. But if it looks like super weird, then you kind of already know that it's not good risk reward. Definitely clunky. Um, but yeah, that's Thinkorswim. How do you gain your hold on? How do you gain back your confidence after continuing losses? That is fantastic. I love that question. Just because you had a bad day, just because you had a bad week, just because you had a bad month, doesn't mean you're a bad trader, right? Like that's something that's super like a huge misconception. People are like, "Wow, I had 3 days of losses in a row. I must be the worst trader in the world." That's not always the case, right? Just because you had a bad week doesn't mean anything. You can always bounce back the next week or the next month. It's perfectly fine. Like I've had like in March, like I've been super transparent about it. I tried to short this. Like this is why I don't fight the trend anymore because I literally tried to short this in March because I didn't, I was fighting the trend the entire time. I lost like 10 in a row, like straight 10 back to back in a row. My confidence was pretty shit for the next like week or two. But I knew in the back of my head, hey, just because I had a bad month doesn't mean I'm not able to bounce back, right? So just kind of think about it that way. Just because you have a couple losing trades, no big deal. Just go back and review your trades and be like, okay, why am I taking these losses? What am I doing incorrectly? How can I fix it? Me personally, my issue was fighting the trend. Right. So that's something I needed to work on and address. And if I didn't review my trades and was accountable with that, how was I expect to learn from it? So that's the importance of reviewing your trades. Uh, how many negative trades would you be enough to stay off that trading day? Probably two or three maximum. Yeah, two or three maximum. All right, one sec. Just keep reading. One sec. That's okay. Why do you want to make a certain money goal a day? Because if you don't have a specific target in your mind, you can end up being greedy and over trading. And the more trades you put on, the probability of you losing is much higher. Right. So the more trades you put on, the probability of you losing is much higher. So you want to have a realistic goal in the back of your head. If you hit that goal, cool, you're done. Why would you keep trading? The thought process of trading, you want to be done as quick as possible. Like if you make your target in like 10 minutes, congrats, you're pretty good to go. You just made someone's salary and probably like someone's 8 hour salary in 10 minutes. Why are you still trading? Go enjoy your day. One sec. Let's see what else we have here. Hmm. Okay, I appreciate these kind of words. Scrub, your analysis is always on point and it's super appreciated. Unbelievable that anyone would talk crap on that. For someone to pay for boiler rooms and complain about the immense value you provide is unreal. The signals are amazing, but at the end of the day, in order to learn, you must be self-sufficient. All right. So that yeah, absolutely. You literally need to be self-sufficient. Like the education is important. That's why I drill education. Like you need to develop your own trading style, your own risk management, and be independent because I could be super conservative, which I am. I'm usually a relatively conservative slash moderate trader, but that might not be you. You might be more aggressive, and that's perfectly cool. Right. So you have to understand what type of trader are you? Like I could be more of a reversal based trader and you could be more of a breakout trader. That's cool. If you still make your money, that's awesome. Like every trader is different. Everyone has different quirks. So yeah, thanks for the comment and the compliment. I appreciate you. Uh Any videos coming out on how to navigate and use unusual whales? Yeah, sure. I'll do unusual whales sometime next week for you guys. We can go over some flow analysis. Someone asked for my referral. Hold on, I'll drop my referral in the chat for you guys. Appreciate you for the support. I'll drop that in a second here. Yeah, so hold on, I'll do all right, just because a lot of people are asking really quickly, I'll do that really quickly. Hold on. So 1 sec. Hold on, let me scroll back up. Okay, so people are asking just some filters I use, just for some filters really quickly. So this is only for day trading. This is only for day trading. So I have about 50,000 premium. I want to do only the ask because that shows urgency. I do about 14 days maximum expiration because I want short-term expiration. I want to see where people are being urgent, trying to buy quickly. I want to see, I don't care about in the money whatsoever. I don't care about that. I want to see out, excuse me. I want to see out of the money because it shows urgency. It means people are buying at the ask, short-term expiration, decent premium size, out of the money. And also I want to see single legs because if we have multi-legs, that means there's hedges and you don't give a shit about the hedges. That's hard to read on what that actually means. So yeah, that's just a really quick filtering. This is more for day trades and like scalps. But I'll go more in depth when I do like a flow analysis video for you guys. I also put my referral. I'll do it one more time just for you guys. I appreciate you. Here, there you go. Okay, hold on. Let me scroll back up. I'll answer a couple more questions. 1 second here. How long have I been trading? I've been trading for roughly 2.5 years. Do I offer mentorships? Yes, I do. If you're curious, feel free to message me personally. We can chat about it. Appreciate your support. When is the sale for your newsletter happening? Again, I find value in your newsletter every week. We're going to be putting the newsletters on sale this upcoming weekend. I mentioned that before, but in case you came late, we're putting it on the Boiler Room website, $10 a week, $40 a month, $105 a quarter. And just by following the analysis for literally a week, you're going to be able to make that back anyway. If you don't want to pay monthly stuff, that's cool. I'll do a quick little lifetime, I'll do a lifetime deal for everyone because I've had a couple people ask me about that. So if you're curious, if you want to, check it out, just message me privately. I'll do a lifetime deal for you guys before that happens. I'll throw some discounts for the homies. So I'll do that before we put it on Boiler Room. So just, message me if you're curious, either on Discord, Telegram, whatever. Appreciate your support. You're the best. Let's see here. Got any trading videos for us? Heck yeah, I do have tons. I offer tons of stuff. I have a lot of stuff here. So yeah. Scrub, what was your biggest loss and how much what was your biggest loss and how much buying power did you start with when you first started trading? That's a great question. I like that question. So I started with pretty small accounts. I started with like 500 bucks, 1,000 bucks. I blew probably, I don't know, eight accounts, 10 accounts, not really sure. Like I said, I struggled a lot when I first started trading. I was very stubborn. I was very greedy. It took me a long time to get out of that mentality. But yeah, so my biggest loss was about $1,100 in a day. And that was like my clicking moment. I was like, cause like the first like 6-9 months, I was kind of like, half-assing shit. Just to be honest, I was half-assing shit because I was like, yeah, I want this, but it's like I didn't put any of the work, right? So I'll just paint the picture for you guys. On my small account, I was up one day, $700. And this is on a small account, by the way. So that was pretty damn good. but I was being greedy. And I was like, nah, 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 nah. I'm gonna swing this, and I think I can get my first $1,000 trade. So that was my rationale to swing it, right? And long story short, the market gapped down. I ended up losing $1,100. So I was up 700 and I lost 1,100, which is, that's pretty detrimental to a small account. So that one really crushed me for like a week and a half. So that was like my turning point in my career. I was like, all right, stop fucking around basically, and it's time to take it serious. And I haven't had a loss, as significant like that ever since. Like um, with like according to my account portfolio. So like I think that at that time I think I had like two grand for my account. So I lost 60% of my portfolio in basically a day. I After that I have never ever done that again. I made it a promise to myself to not blow up again, and I haven't blown an account ever since. So that was like definitely my turning point for sure. I've been having a bad 3 years. Truthfully, pal, I'm gonna be straight up honest with you. You really need to sit down and like be honest and like figure out your top 5 mistakes and just be accountable. Be like, okay, what are my top 5 mistakes? What do I find myself doing the most often? Write them down. Okay. And then be like, all right, out of these five, which do I do the absolute most? Right. Okay. Now you figure out your big issue. Now it's your time to figure out a game plan over these next 4 weeks and tackle it. Be like, okay, maybe I'm over trading. Maybe that's my biggest issue. Maybe I'm over trading a fuck ton. Your goal in the next 4 weeks is to not overtrade. That's your goal. Like, stop yourself from overtrading, get up earlier, have a trade limit, be like, okay, I find myself trading 8 times a day. All right. Now your new goal is 3 times a day. Right. So you challenge yourself to actually be accountable. Right. Because truthfully, over 3 years, you should be having some success at this point. So it's clearly an accountability issue, and you need to focus on like, what am I doing incorrectly? How can I fix this? And then you work for small goals. Just be like, all right, this is my goal for this month. I wanna work on my over trading. Okay, and then 4 weeks. Okay, my over trading is down 70%. Like I barely am over trading. I'm doing great. Okay, so that's not that big of an issue anymore. You've tackled that. And then, all right, here's my second biggest issue. Maybe I don't know, my stop losses are too tight. Okay. So then you work on that for the next 4 weeks. All right, then maybe I can widen my stop loss just by a little bit, simply because I keep getting pinged out of all my trades. Okay, work on that for 4 weeks. And start just chipping away, chipping away, chipping away. And if you just address all these issues over a 4 week duration, and you do that over these top 5 things, right? So in 20 weeks, you're going to be a completely different trader. You're going to be worlds better because you're just making these small adjustments and you're just chipping away, chipping away, chipping away, right? So study, be accountable. I believe in you. Don't quit. You're going to be awesome. Truly believe in you. What else we got? Hmm. 1,100, bro. That's it. Is that a lot for a person that had $2,000 at the time? 1,100 is pretty goddamn detrimental. Like that's a lot of money for me at that time, right? That might not be a lot of money to you, but at that time, that was 60% of my account. I was pretty upset for like 2 weeks because of that. Okay, yeah, that's a good question slash thought process. What if you are jumping all over the place with setups and indicators? What would you recommend? I've been trading for 3 years, still not profitable. Honestly, man, I would just pretty much just try to stick with like 1 or 2 things and just really start trying to focus on them and be like figure out what you're doing incorrectly. I kind of like, just talked about this a couple minutes ago, but you figure out what you're doing incorrectly and just try to chip away at it and just always try to do your best and just study and just be accountable and journal, because if you don't journal or you're not like reviewing your trades, you're not going to get better. One sec. Have you ever used the MACD? Truthfully, not really. Like I know how it operates, but I try to use as less. I try to use the least amount of indicator as possible. Like I use basically moving averages, like a couple moving averages, and VWAP. That's pretty much it. One sec. Okay. All right. I'm gonna drop my unusual whales referral again because I know a couple people are asking. So there's my unusual whales. And then if people want just to contact me, ever have any questions, any of that kind of fun stuff, there is that. That's my Discord. And then my Telegram is that. And then if you want my YouTube, because I know people are asking, so here you go. Now you have all my stuff. If you want to chat, check out some content, always happy to help. I'm going to answer 2 more questions before I end it. We went a little bit over my time. So 2 more questions and then we'll end it for the rest of the night. What is the best way to understand VWAP? I actually made a video about that. It's right, where is that? Right here. It's a 5-minute long video. Highly recommend checking it out. I explain VWAP and how to use it. How to identify if price action is weak. Looking at volume. Volume's a good indication for sure. What do you feel about RSI? I don't mind RSI. Like I said, I don't really use very many indicators. Now, if I'm swing trading, it's a little bit different. I will use more indicators. But if I'm day trading, I try to use very, very little, because if I put a shit ton on my screen, it's kind of like, information overload in a sense. So yeah. What's the difference between this VWAP and the TOS VWAP? They're exactly the same. Yeah, they're exactly the same. What type of traders should follow you? Scalpers, day traders, traders with larger accounts. I signal and I do analysis for scalpers and day traders. If I'm specifically looking for a swing based thing, I will, I'll say could be a swing. How can we review the recording? I'll post a link after it's uploaded. I got you. Reversal indicators, Fibonacci's are pretty good. Supply zones, demand zones, hard levels like resistance, support levels of like monthly time frame. Using the book map is pretty good because you can see the liquidity areas. All right, 2 more questions, and the answer is 5 more. Yeah. I'm just trying to help the homies out. Anything to help a fellow trader out. All right, last time. All right, what's your last question? What's the last question? Who do you look up to for mentors? I have a couple actually throughout my career. I'm personally good friends with a couple of different 6-figure traders. That's helped me along my way. Yeah. I really would recommend checking some like mentorships out, something like that, because you want to surround yourself with people like-minded with you and possibly ahead of you, so you can kind of, be a sponge and gain extra additional information, and they can help kind of like guide you through your process and all that stuff. So I'm, like we said in the beginning of the sessions, I'm very, very big on education, and I wish I did it sooner, because it's really helped me pretty much, accelerate my career. So highly would recommend checking that out if you're on the fence about it or anything like that. All right, I linked my stuff one last time. There is my Unusual Whales, my Discord, and my Telegram. If you want to contact me, if you want to talk trades, if you have any questions you think about after the fact, always happy to help. Always happy to help a fellow trader. And to the people that were asking me about the newsletter discounts, just message me privately. I'll help you. I'll hook you up with the discount. Always happy to help. And yeah, appreciate you guys for taking some time out of your night. I hope you have an absolutely fantastic weekend. You stay safe. If you have loved ones, give them some hugs and kisses for me. Enjoy the rest of your night, guys.